All right, guys, welcome back to We Talk Money. It's been a crazy past month for us. We had the wealth building retreat here in beautiful Austin, Texas. And yeah, we're just getting back in the swing of things. We've been doing some deep research, taking a look at the markets here. We've got Bitcoin that's up 46% on the year. We've got stocks that are having almost a record year for the century so far. I think in the last 24 years so far, we're like outpacing almost every year. And yeah, there's a lot to talk about. A lot's happened since our last show. We've had a couple of hurricanes, one about to hit. And yeah, just a lot of stuff on the macro front. How you guys doing?
Fantastic. Great to be here. Great to be back on the pod.
Yeah, feels good to be an investor right now, actually, with the S&P making all-time highs.
Yeah, it's kind of crazy. So yeah, taking a look at the markets, the yearly chart here on Bitcoin, we've been bouncing off of the all-time highs like half a dozen times. As of right now, we've got the S&P that's knocking on a new all-time high. We've got MicroStrategy, which has been kind of the talk of the town this week. We're going to dive into basically what the thesis is behind MicroStrategy and why people are buying this stock either as a proxy for Bitcoin or a way to get levered access to Bitcoin. We're also going to talk about gold and silver. We've got a Satoshi documentary that claims to have revealed who Satoshi is. We'll see if that's legit or just complete BS. And also, taking a look here at this is a chart that Trav just pulled up or created rather, is the S&P 500 October returns during election years for this century. So October 2024 was the only time that the markets actually closed green, and they were only up 1.4%. But October in 2008, 2012, 2016, and 2020 were all red. Trav, do you think that is going to continue, or are we going to see this trend get turned upside down?
Well, it's hard to deny the current market strength. So maybe this is the year similar to 2004 where we actually see a green October. But yeah, I think the data does suggest that October is volatile. The uncertainty of elections can make stocks get a little bit jittery, and it's a small sample size, so we'll call that out. But I do think, October does have the potential still to be a rocky month, even though we've started the month on pretty good footing here, at least on the stock side. There is a lot of uncertainty over what happens in early November. I've even heard people say that we might not even know the outcome of the election in November, which is a kind of a scary proposition. So yeah, I think there's still uncertainty. There's still potential for there to be some risk off sentiment here going into the end of the month. And that being said, it's hard to figure out why we should be super ultra bearish on the markets either, because, even things like the port strike got averted after just a couple of days. People were worried about that shutting down the U.S. economy. People have been worried about the hurricane's impact on the economy. And yet, I think Q3 GDP estimates are still sitting above 3% real GDP growth right now. And that's, again, another thing that just kind of points to optimism in the market. We've got unemployment rates last week ticked down for the second month in a row. So the jobs market, at least in the US, looks pretty good. We've got China coming back to life, which we should talk about. So the Chinese stocks have been an interesting one here in the past couple of weeks. So there's a lot to be bullish about, and fewer and fewer things it seems like to be bearish about. Of course, maybe that's the rug pull. Maybe that's what happens. A lot of times, sometimes the bottom can fall out of the market at the most unexpected time. So we do have to be careful to not get too overly bullish. But it is a pretty interesting market environment out there right now.
Yeah, and taking a look at the chart, the monthly chart on the S&P 500, we're looking at, if October closes green, that would be the 6th green month in a row. And really the only red month so far this year was in April, which was just a little pullback. And so we're definitely in this like stair-stepping bull market pattern. There's no massive signal of a market top as far as price action goes right now. It's just, again, kind of stair stepping, and all the dips continue to get bought up.
And even we talked about this in the stock market update on Monday, but when we look at the Magnificent Seven, I think Meta is the only one that's like making all-time highs, and the other Mag 7 stocks, they're in pullbacks, or whether it's, deeper pullbacks like Google, but others are not exactly at all-time highs. Some are just shy. So there's still some room to kind of run in some of the Mag 7 stocks if they wanted to rally, and help push the broad index up, the S&P 500 up further. Because what's happening is we're getting like a broadening out where the non-Mag 7 stocks, they were starting to see some momentum and, some buying, some demand basically. And so we're seeing a broadening out where the lower, 493 stocks are starting to kind of have better performance. And if the Mag 7 starts to see momentum again, the Googles and the Microsoft, they start to have a rise in their prices back to that all-time high zone, that could help fuel more bullish momentum in this market in S&P 500. So that's something I've been thinking about, is the Mag 7, how a lot of them not being at all-time highs, they pushed all-time highs. All the other stocks in the S&P are starting to rally or get some buying, power behind them. We could see this stock market rally further than we think, or at least that's how I'm thinking about it. I don't know if you guys have any thoughts on that, but that came to my mind this week.
Yeah,
Well,
you could have
Oh, go ahead, Trav.
Oh, yeah, no, I'm just gonna agree that, it's actually been great to see the broadening out of the performance in the market. Even small caps there since the middle of the summer have been doing reasonably well. And so the broadening out of the performance is actually a good and healthy thing to see. But you're right, if we do get a renewed push in some of the Mag 7, I noticed like Nvidia recently was kind of working its way back up. Tesla's got the big robotaxi event tomorrow, the big unveil that could maybe potentially put some juice back into Tesla stock. And if we did see a renewed push in some of those heavier weights of the S&P 500, that could just extend the gains through the end of the year. So that's definitely a possibility as well.
Now,
one thing that we've been talking about at the wealth building retreat that we did last month is the fact that the Russell 2000 is actually still below its prior 2021 highs, and how, this kind of rounding pattern has been forming where small cap has started to pop off just in the last couple of months. And I know in the community, we've been focused on some accumulation breakout type opportunities. There's stuff like a lot of Chinese stocks have actually just broken out pretty big this week, obviously, like Alibaba and FUTU, and the big one was Tiger, which is basically would you guys describe it as like the Asia version of Robinhood?
Yeah, that's a good way to put it.
Yeah. Yeah, it's had a pretty deep pullback, but a really big breakout over the past week. And so, I know we've just been doing a lot of hunting. And I think for anybody that's kind of been sleeping on stocks, there's still a lot of stuff that's beat like 80 or 90% below its prior market cycle all-time highs that, again, if these small caps start to see some juice, I don't know. I think there's going to be a lot of kind of popcorn season in the stock market that we could start to see.
Definitely.
Nick, were you going to say something?
Oh, I was just going to mention, valuation of the S&P 500 right now. A lot of people are maybe thinking that it's, too expensive to be continuing to rally. But I, like Travis mentioned, a lot of the economic side of what we're looking at doesn't look bad. And it actually is looking, dare I say, good. The payrolls report was really strong. The unemployment rate ticked down. So we're going to be watching spending, of course. And of course, natural disasters happening in the U.S. could affect the economy and could affect retail sales, unemployment, things like that. So we'll have to kind of watch that over the next month or two. But overall, the data that we've received was good. And that's, I believe, why bond yields were rising. So people were kind of worried that maybe the strong economy is going to lead to inflation. kind of being a problem. We'll find out I think we'll find out Thursday. We have the inflation report coming out Thursday. So we'll find out if in fact we need to worry about that or not. But I can, even though the market is valued high around 21 times forward earnings for 2025, I can see that this could continue until it could push the limits. So I think people that are kind of waiting to get into cash need to be, or waiting to deploy cash for a big correction, need to be careful, because I can see the momentum continuing and surprising everybody here. I don't want that. I want a correction. I think the market is not showing value right now. However, we've seen this happen before. We know that this stuff can go longer than we think. So just be aware.
Well, what do you guys think about this? Like, I've been seeing the narrative of, Berkshire Hathaway, Warren Buffett has record levels of cash right now. A lot of insiders from some of the large companies have been selling both systematically and kind of big block orders. Do you guys look at that as kind of a top signal, or is that just normal market behavior?
Yeah, I don't think Buffett's not much of a market timer. Even though people will make claims about it, you also need to look at Buffett's cash position as a percentage of the overall net worth or assets of Berkshire, and it's not at like some crazy level relative to history. Like, it's certainly high relative to where it was of the past few years, but I think it's something like 17 or 18% of total assets in cash, and so it's been there before. And again, I don't think Buffett is in seeing something that we're not seeing. There's also, I hate to say this, but there could be something happening behind the scenes, with Warren's health. We don't know. There's certainly going to be a shift, in the next few years of management with Berkshire Hathaway as Warren, does reach the end of his career. And so there's other considerations there at Berkshire. Also, they've been selling Bank of America and Apple, which have been monster winners for them. So they've been selling their winners and taking some profits. And I don't think that's necessarily a bad thing or a scary thing. So they're not like blowing out of their entire portfolio, so to speak. So yeah, I think something like that, I think, gets to be a little bit overblown as it relates to, warnings about what's happening in the market. But I do think, Nikki mentioned valuations, and I think Berkshire certainly looks at valuations and they consider that, and they're probably having a harder time finding bargains in the market, frankly. And so am I. So I think that's something also to consider. And that's why Nikki said we root for corrections. And certainly we would love to see a nice, maybe even hopefully bigger than a 5% correction, which is the level of corrections we've been getting this year. So it'd be nice to get a real deep washout at some point.
Awesome. So let's talk about an example of like one of the best performing stocks in the market, which is MicroStrategy. And, I listened to the earnings call again yesterday and was just trying to really think about the bull and the bear case for their, like, they call it the intelligent levered play on Bitcoin, basically, like how they're going to, raise money and sell, or raise debt, sell convertible notes, and use that money to acquire more Bitcoin. And then on the most recent call, they talked about what they're calling the Bitcoin yield. And so I pulled up some notes and had ChatGPT kind of organize these a little bit better. And I'll post this link in the show notes for anybody that wants to read through this. But basically what it does is it just kind of explains what the strategy is and how much Bitcoin they've purchased and what the BTC yield is. And the way that they define it, the BTC yield is the period to period percentage change in the ratio of their total Bitcoin holdings to their assumed diluted shares outstanding. So basically, how much Bitcoin per share are you getting as a shareholder? And so, their thought is if they increase their Bitcoin holdings over time faster than they increased the diluted shares, then you get a positive Bitcoin yield. So, Trav, I wanted to kick this to you and just talk about, like, what is the bull case here? What is the risk with a strategy like this? Is this something that's totally unique, or have other sectors done something like this before? And do you have an opinion? Like, is this overbought? Is there a value? I think at the time of this show, they're basically more than twice the valuation of the Bitcoin that they hold, and their software kind of core business isn't even that big. I think it's just like what, 3 or 4% of the total market cap. So yeah, take it away, man. What do you think of this?
Yeah. Well, I think it's a good framework. I think management has laid out a good framework for how they think about increasing the per share value of the company, which is the right way to think about it. When you think about how to create value for shareholders, it should be on a per share basis, because any company can go out, issue a bunch of equity, issue a bunch of debt, buy companies, buy assets, and increase the overall size of the company. But what is that size on a per share basis? And so that's why also when you look at, financial geniuses, so to speak, like Warren Buffett or Jeff Bezos in his early Amazon letters, they talk about the rate at which companies are growing free cash flow per share. So again, it comes down to, on a per share basis, what value are you seeing in terms of the growth? And so MicroStrategy basically has 3 ways right now to increase the value of its net assets. And really, we're talking about the value of its net Bitcoin holdings, because that's the asset they're most focused on. So they can either, issue debt, they can issue equity, or they can use the cash flows of the software business to fund more Bitcoin purchases. And like you said, the existing software business just isn't that big right now, and it's not growing that fast. So it can't really kick off so much cash flow that they can buy billions and billions more of Bitcoin every year. So they've been issuing debt, they've been issuing some equity. And it actually makes a ton of sense when your stock is trading at a huge premium to the value of the assets to keep issuing more stock, to keep buying what you believe to be undervalued assets. And we have seen this strategy played out in other industries. So REITs do this, business development companies do this. There are a lot of other companies. We've seen roll-ups, private equity roll-up companies do this. And so essentially what you do is, when your valuation is very high, your stock valuation is very high, it makes sense to sell stock to fund purchases of undervalued assets. And hopefully over time, those assets go up. And that way, the value of the assets grows at a much faster rate than you're diluting the share count. So again, it's all about the rate at which you're increasing your net asset value per share. So there's that trade-off. Of course, you're going to experience some dilution, but if the assets are increasing faster, that's a win-win for everybody. So I think it's a good framework overall. The risk, of course, is that at some point, if your stock stops trading at a premium, then you can't really issue more stock at a non-dilutive pace. And it becomes harder and harder to actually increase than an asset values of the company. So this is essentially financial engineering in a way. And at some point, the financial engineering will have to stop if the share price crashes. And so what you can see here is it's very reflexive. On the upside, when MicroStrategy is trading at a huge premium, it's a great time for them to issue stock and keep acquiring more assets. But if the stock falls in a bear market, this could work against them. And by the way, they've also issued debt. So that could create a reflexive feedback loop on the downside. I would also say something like GameStop in a way is kind of similar, because their stock has been trading at a huge premium to book value, and they've been issuing stock. So now they have $4 billion of cash sitting on the balance sheet. No one quite knows what they're going to do with that yet. But that's another situation where you have a stock that's trading at a big premium to the core value of the company. But they're smart, management's smart, by issuing all this, all this new stock to raise cash, and hopefully they can use that cash to buy productive assets. But yeah, I think MicroStrategy, I wouldn't really want to be short it in a market where, Bitcoin is in a solid uptrend. You can take a bet against that premium to the Bitcoin value, maybe when you're in a more of a bear market. That might make more sense.
Yeah. So thanks for that explanation. I think that's really powerful. A lot of people don't quite understand, like, okay, well, why would you pay a premium instead of just buying spot price? And there's no denying the fact that, since this market cycle lows, like MicroStrategy's stock price has actually done much, much better than just the spot Bitcoin price. So we'll pull this up right now. You can see if we do a percentage since, let's call it like January 2023, which is where the bull market really started. The stock is up roughly around 700%, where Bitcoin, I think, is up around 270, if I'm not mistaken. I'll just add this to the chart as well. Actually, no, 170 from the market cycle lows. So yeah, again, MicroStrategy's done much better because of that kind of levered way, like you said, Trav, like the financial engineering that they're doing. So would you say that up here, it's like super risky? And, I know that, some people that have been talking about the bull case are actually going to say short MicroStrategy and then go long spot Bitcoin. Is that silly? Is that over risky? How can an individual investor think about this, obviously we can look at the chart and just trade based on the technicals, but do you see an opportunity here, or does it just seem way too risky at this level?
Well, let me give you an interesting example from the stock side. So there's a company called Icon Enterprises. IEP is the ticker. And if you look at a longer term chart, IEP is an interesting company. It's actually the publicly traded vehicle for the hedge fund manager Carl Icahn, the famous corporate raider, the famous basically hedge fund manager. And so for a long time, for many years, for over a decade, that stock traded at a big premium to the value of its corporate holdings. But that also allowed Icon Enterprises to, along the way, sell more stock and acquire more assets. So in a very reflexive way, the stock being at a high price actually led to the stock trading at a subsequent higher price. For many years, this happened. But of course, recently, twice actually, after the GFC or during the GFC, and then also recently in the past year, you've seen the stock collapse by more than 50% when the premium just disappeared because there was a catalyst for that premium to disappear. The market got worried about the underlying assets of the business. People started questioning why the stock should trade at a premium, such a high premium to the value of its underlying business holdings. And so these premiums can disappear very quickly in market environments where there's some negative catalyst. So that's I think a good example. But again, you can see the chart and how long, if you had tried to bet against IEP relative to the value of its holdings, you would have been underwater as a short seller. And I think that's the danger of trying to short MicroStrategy against a long Bitcoin position is, yeah, it may be trading for 2.5 times its Bitcoin holding value. But number one, at that price, it's going to continue to accumulate more Bitcoin. And number two, why couldn't it go to 3.5, 4.5, 5 times its Bitcoin value in the short run? In the long run, sure, you may win on that arbitrage of shorting MicroStrategy and long Bitcoin. But what if it takes 10 years? What if you get blown out, in the interim? And that's the scary part about trying to do something like that, where you don't have a firm catalyst in place for that premium to collapse, if that makes sense.
Now, I know that at one point MicroStrategy was shorted at a higher rate than it is today, but it's still, shorted. So, I mean, Finviz is showing 14% of the short float. So of the float, not the outstanding shares, I guess, but
yeah,
some people report this differently. So I guess there's also been that side of it too, because I believe it was higher before. At one point.
Down at the lows in their stock price, it was actually up close to 40%. So yeah, right. I mean, there was absolutely a short squeeze already in MicroStrategy prior to the bull market.
So there's also that question of how much of the naysayers, people that are betting against MicroStrategy, they're just getting squeezed as well. So that's adding fuel to the fire. So that's another thing to think about.
Yeah. And there's several ways to think about getting levered exposure to Bitcoin, right? Maybe we can just use this as an opportunity to look at what those options are. Like Trav, you mentioned the new tickers here, BTCL, which is a 2x long Bitcoin ETF, and then the inverse BTCZ. And then obviously we've got all these just kind of spot Bitcoin ETFs, like IBIT is the largest one. You can trade CME futures, you can trade unregulated futures, right? So MicroStrategy is really just one kind of way to get levered exposure to Bitcoin. Where would you maybe place this on a rating scale? Like if you had to say from most risky to least risky, where does MicroStrategy sit in that risk continuum?
And it's probably somewhere in the middle. And honestly, it would definitely not be my favorite way to get a leverage exposure to Bitcoin or crypto. I think we're going to have very soon, if not, I think I saw an announcement recently that it's incoming options on the Bitcoin ETFs. And so you'll be able to get implied leverage via options, via call options and call spreads and things like that on the Bitcoin ETFs. So there'll be that way to get leverage and have a very defined risk downside. So that to me is a lot more interesting than, trying to short MicroStrategy, which could have a squeeze and go up in your face and be up 1,000%, whereas your options, you're limited to, a fixed amount of loss potential. So something like options on the Bitcoin ETFs, I think will be much better. Or you mentioned, if you're doing a swing trade in the short term, something like one of those levered ETFs could also provide you implied leverage. And so those, I think, would be, for me, in the higher tier categories, whereas something like a MicroStrategy is going to have that risk, like with IEP, where you just, overnight, in a couple of days, you could have the premium collapse and you could be in a deep loss position pretty quickly. Even though I don't expect that to happen from what we can see today, it's a risk, right? And so I don't think you're maybe getting a couple turns of leverage on underlying Bitcoin with MicroStrategy, but I think you can do better with more defined risk using some of those other vehicles.
Awesome. Well said. Okay, moving on. So another hot stock that's been in the news lately is Palantir. And I went super deep down the rabbit hole. I'm not early to this by any means, but just over the past couple of weeks, I've been doing a lot of research. I actually looked at some product demos and, thinking about the bull case. And it was cool seeing the video of, was it Alex Karp, the CEO, when he was celebrating getting listed included into the S&P 500. And as of right now, it looks like they're breaking out close to a new all-time high, and at a minimum outside of their accumulation range. So this is one of the most expensive stocks in the market right now, but it's also one of the, optimistic kind of cult stock. And, we generally on this show, we make fun of cult stocks like GME, AMC, Bed Bath Beyond,
Tesla,
right? But this is one that actually has like a very real use case, a growing market, customers that love them, government contracts, right? So to me, if you're going to be cultish about any kind of stock, you might as well be in the camp of one that's winning.
That's right.
So, yeah. What do you make of this, guys?
I mean, it's now become one of the most expensive stocks in the market. You can't deny, the stock has obviously been on fire. It's one of the best performers, especially of legitimate companies in the market with large market caps. Like the stock is up over 150% year to date. I think just even the last month or two, it's up 30-40%. And so, yeah, I think the company's fundamentally executing. They're winning more contracts. Revenue's growing 20-30% a year. Earnings growing faster than that. They're profitable, generating cash flow, serving a real need, and helping to disrupt, at least on the software side, some of the traditional defense contractors. So there's a great story there, a real fundamental story, but valuation wise, you're getting to levels that get really hard to defend, trading 33, 34 times this year's revenue estimates. So market cap to revenues, that's not a PE ratio, that's market cap to sales, trading at 34 times. And so we've seen in the past, when stocks get really hot or they have hot IPOs, software stocks can sometimes trade at that 30-40 times for brief periods. But then you see like Snowflake, Cloudflare, examples like that. Inevitably, they're going to pull back. Growth will slow down at some point, and there'll be, a reckoning if you're buying it in the parabolic chart. So you got to be a little bit careful. But I mean, I think it's like you said, if you're going to buy a cult stock when the fundamentals are working, that's a great time. And it's certainly working. So yeah, I think there's a lot to like about Palantir, but you don't have to like the price that you're paying today.
It's interesting how capital's flowing right now. It seems like, in the stock market, it's risk on, things are popping off. Obviously, Bitcoin has been dead flat going on 7 or 8 months now. And I think a lot of that has to do with the election. Something that I saw the other day, actually during the community's stock market update, I pulled up the poly markets and I noticed just in the span of 1 hour, Trump went from basically being close to 50-50 to popping close to 54 or 55% in just an hour. And I think one of the drivers behind that was Elon had offered to pay, what was it, $47 to anybody who registers to vote in a swing state. So he's obviously come out swinging. He spoke at the Trump rally, and so I think maybe that was some fallout from that. And something that I think is interesting, and just kind of sad really is a lot of people don't understand what betting markets are. They look at it as like a poll. People are like, oh, you can't trust Polymarket because it's, you've got Peter Thiel that has some interest in it and it leans right wing. It's like, okay, even if that's true, this is a betting market with over 1.5 billion dollars at stake. And so if you think there is a bias, you can take the other side of that trade. But, obviously betting markets aren't going to be perfect, but in a way, I kind of trust these more than just some kind of like random poll. And I think we've talked about that, but how do you guys think the market is either waiting for or reacting to the election, right? Like we've seen the stock market that's kind of slowly stair stepping up. But do you think, investors in general are just kind of sitting on the sidelines, or are they not really fearful of any outcome? What do you guys think?
I've heard some whispers among institutional investors I know that are a little bit concerned about the potential for higher tax rates. I think that's one area in particular that investors are sensitive about. But given where, like you just showed, the prediction markets are for the election, it's hard to get too overly worried because Kamala and her party don't appear to have an edge right now. Maybe it's 50-50 at best, or it was a few days ago. Now it looks like prediction markets leaning a little bit in the favor of the Republicans. But that is an area I think that would be a potential negative for the market and for investors generally, is if you did see the Democratic Party win the election, just because of that potential for tax rates to change for investors. So that's a very direct impact that I know some investors are worried about, but still cautiously optimistic that the worst of the worst ideas on the capital gains front, i.e. unrealized capital gains taxes, will still not come to fruition, because even if the Democrats win the presidential seat, the idea is that they won't sweep Senate and House as well. That I think has a quite a low probability right now. So it does feel like investors are mostly not too concerned given what we see right now, but that could shift. This is going to go from a 50-50 to, presumably 100% once we have the actual election. And so we'll have more certainty around that. And that could actually create some changes in certain stocks, certain sectors, and certainly the market as a whole once we get better information on where things are actually headed. So that's how I'd characterize it. Certainly with the S&P hitting, fresh all-time highs today, it's hard to say that investors are super worried.
Now, there's investors, right? And then this is something that could affect the stock market, but there's actual consumers, meaning, you and I, and also businesses. And what I noticed was in the ISM services and ISM manufacturing report is that there were comments, they poll different businesses, and there were comments from these businesses that were saying, we're noticing that people are waiting to spend money or make big decisions until after the presidential election. And this was in both the manufacturing, and it was more so in the manufacturing, but it was also in the services side as well of the report. So I've been questioning, and I've heard this from anecdotally from business owners that I know that say, hey, people aren't letting go of their cash right now. They're not buying. They're not, bringing in orders. They're waiting because they want to see what's going to happen. And I was like, how true is that really? I don't know like the data on that, but it does appear that that is happening across different parts of the economy. So my thought is, okay, presidential election gets behind us. Whether it's red or blue, doesn't matter. It's behind us, right? So is that going to start to open up some of that spending? Are companies going to start to spend more? Are consumers going to start to spend more and feel more comfortable, now that that's behind us? And what will that do for the stock market? So when we're kind of leading back to what could fuel the market continuing to rally from here when everybody really is waiting for a big crash and for the economy to go into a recession, there's all the things we've talked about prior, but there's also this idea that a lot of people are holding on to their cash until the election's over. So I don't know, maybe that does kind of change and shift how things look going forward, and the economy gets even stronger as people start to spend again. So that's something that I've thought about too. In terms of, I know that you were kind of mentioning the stock market and how investors are reacting, but this is how actual people and businesses are going to be reacting and how that's going to affect earnings.
Mm.
And I think something that's kind of related to that is the employment or the unemployment situation. What's the latest on that? I know over the past month, it seemed like there was kind of some conflicting data. Is it looking optimistic, pessimistic? What's your latest read on that?
Yeah, I mean, the last few data points we've got have been leaning more on the optimistic side. We've got the official unemployment report that came out last Friday showed, the official unemployment number basically ticking down for the second month in a row. I think down to what, 4.1 or 4.
4.1.
Yeah, 4.1% or so. Job openings in the JOLTS job openings report had been trending down this year. And that was one of the leading indicators that we were starting to get a little bit concerned about. But, there was an uptick in job openings last month, weirdly. I don't know if that data is accurate. It could get revised or it could just be a one-off, but that was something that actually trended positively. That was, in more of a negative trend so far this year. Even things like the weekly initial jobless claims have trended down over the last couple of weeks. So it does seem like the news on the unemployment front has been getting incrementally better just in the past month or so. So I don't know if that's because of, expectations of lower rates or, maybe even some of the stuff like political spending, can have a positive effect on the economy in the short run. And, maybe that offsets some of what Nikki was talking about, where some consumers, I'm sure, are pulling back or waiting on some purchases because of uncertainty. You've got the hurricanes. Florida is the fourth largest GDP of U.S. states, and so that could have a softening impact for the month of, say, October or November. And that's something, that's why I think it's really hard when you're looking at these short-term data points to extrapolate to a broad trend. That's why we have to watch a bunch of indicators and we have to watch them over a series of weeks and months to really get an idea. And, that's why I think also there aren't that many very good macro forecasters. We try to think about how investors are positioning relative to the market, relative to how the market's doing. And try to make decisions based on that. But we know we're not going to be right about forecasting exactly what the economy is doing. But yeah,
I feel
unemployment
like
looks pretty good.
Variables.
We
Yeah,
Talk
so many
Money's
variables.
been pretty okay though. We've been doing this for a few years now, and I feel like we've been kind of on the money, maybe more contrarian to some of these economists. But
Yeah, I mean,
Yep.
you guys were early to the inflation. You said inflation was coming. You were early for disinflation, and
Mhm.
actually tomorrow. So we have inflation numbers and initial jobless claims coming out on Thursday. So we'll see how that affects things.
Mhm.
All right. Let's see. Tomorrow we also have Trav, I think you mentioned this, Tesla's robotaxi event. I've heard several people say that they think it's going to be a big kind of want, like a lot of future speak, but nothing like immediately on the horizon. Do you guys have an opinion on that?
Yeah, that seems pretty likely, but I think they'll probably try to pull something out of the hat to get people excited or to surprise the market, just because they know that that's how analysts have been framing this, and they also
Mhm.
they delayed this from August. So originally there was going to be that event in August, and then they pushed it out to October. So I think Elon's going to try to do his best to make a splash, and there could be a couple of different things that come out of that I think could be slightly surprising. So it's interesting to look too. The stock hasn't really run that hard ahead of the event. I mean, it's certainly been in a little bit of an uptrend over the last couple of weeks, but nothing crazy as far as Tesla's concerned. So I mean, the stock could be setting up for a positive surprise here. I'd be a lot more worried if the stock was pushing 300 ahead of the event, but it's not. So I think potentially this could be a positive for Tesla, and we'll see. I guess it's going to be very interesting to see the impacts of what they say. I think that event is tomorrow evening, so we'll know
Mhm.
Friday morning.
Yeah,
it's
I
been
know,
interesting to see Elon get so political. And I wonder what that's
Yeah.
doing for his investors and how minds are changing about Teslas and things like that. Like I wonder if any of that is actually happening.
Nick, what have you noticed? I know we talk about this, but what did you notice about the sentiment
I've
around
noticed
Tesla owners?
sentiment is changing around Tesla, and I have nothing to do with it. Tesla's fine. I don't have anything against Tesla, but I've noticed a lot of the social media skits are starting to kind of hate on Tesla owners. And
Mm,
I'm not saying that that's like political one way or another. I just think it's kind of like how bodybuilders are moving away from Chipotle into kava. It's like
Really?
people are
What's
moving.
that
Yeah,
about?
it's a trend. We can talk about that in a minute. And kava is trading at a crazy multiple too, similar I mean, for a food company, it's crazy. But I think that what's happening is people are viewing people that own Teslas as like, I don't want to use like a word that's going to offend anybody, but I don't know. I think that it could become unpopular to be owning a Tesla in some people's eyes. Not everybody, of course, but that's the trend that I'm seeing kind of out there right now. And it could be because people are hating on Elon getting political. It could be because people are starting to realize that EVs, are harder than they think or something. Like, I have a friend that just rented an EV. She came to town, had to rent one, and that's what they gave her, and she hated it. She was like, this sucks. Like, I spent $30 and I only got to like a 40% charge on my car because she doesn't have a charger at her house. So I don't know. I don't know if sentiment is kind of changing around EVs in general. So that's just what I'm noticing.
Well, I think the hurricane is also causing a little bit of anti-EV sentiment. I saw videos of during the North Carolina floods, EVs in garages catching on fire, and also from the latest Florida hurricane that happening. And then this morning I was watching just an announcement about evacuations in Florida, and the lady said, "Hey, if you have an EV, get it out of here. Don't leave your EV in the salt water in a flood zone because it'll probably catch on fire and could burn your house or a condo building down." So that's something on top of, also talking about like Tesla hate, everybody that really, really hates the Cybertruck. I mean, I think it's ugly and, obviously it's failed to like live up to its promises. I don't like hate Cybertruck owners, but how many like videos and pictures have we seen of people like flicking off Cybertrucks? I mean, there's a lot of people that
don't like
genuinely
them.
hate them. Yeah.
They don't like them. Yeah, it's very strange, but it is a trend I'm noticing. Whether it's going to last or not, I don't know. But we keep our eye on trends here. So
yeah.
The Q.
Oh, go
Oh,
ahead.
I was just going to say real quick, the Q3 deliveries report for Tesla, I think it slightly missed expectations, but overall it was, if you look at the numbers relative to Q2, they were better. And so that was interesting to see because I think there was an expectation that maybe Tesla was going to have a really bad year here. And at least Q3 looks like it was a little better than the bears expected. So that was one thing that would kind of be contradictory to what you're saying is like, yeah, it seems like, although I do think a big part of that was actually China sales recovering for Tesla, like US and Europe remain relatively weak overall. So if Tesla does run into a longer term demand problem, I mean, the stock does still trade at a big premium to its peers. So there could be downside in the stock for sure. And it is interesting to think about whether or not the political activism is affecting the business. That's something that most people probably haven't had to think about as an investor.
Yeah. How do you guys think about that? Like, no matter what your, political leanings are, when you look at Tesla as a company and Elon as the CEO, is there concern there that, man, his eye is just off the prize and he's focused too much on politics? Or do you think he's, some Superman that can do all these things and still grow Tesla the right way?
I saw an interesting perspective recently from someone online that said that it actually was genius of him because he had sold all these EVs to, left-leaning people who were early EV adopters, and then he shifted to the right, and now he's going to open up the market for conservatives to buy EVs. So that's an interesting thought. But I think that would still be a relatively short-term or medium-term perspective because long-term, you don't really want to cut off half your addressable market, whether it's left-leaning, right-leaning. You want this business to be sustaining. You want them, even if they bought their first Tesla, if they were left-leaning early adopters, you want them to buy a Tesla 5 years from now, 10 years, 15 years from now. So you want those customers to come back at some point. So you don't really want to eliminate half your potential market. So I think, there could be some risk there to being too politically activist and alienating some customers. That's why you see most corporate CEOs try not to be too, publicly loud about, political about who they're supporting. But that's harder and harder to do these days.
I mean, celebrities, that's no it's not new that celebrities are endorsing, right? It's just that it's Elon, endorsing Trump, which is probably inflammatory for a lot of people. So,
yeah.
Well, and we do have to remember that he owns X and he's super pro freedom of speech, and so there's that whole debate right now. And without going down that rabbit hole, I'll just bring it back to Tesla and Trav. I wanted to pull up your tweet here where you showed the revenue, or rather lack of revenue, from Tesla's different efforts, and I thought this was really interesting. You want to just explain what this is showing?
Yeah, so Tesla had an interesting slide in one of their investor presentations earlier in the year showing all these different components of how Tesla is not just a car company, right? They're developing humanoid robots, and they've got these battery plants, and they've got these, charging networks, and they've got the energy storage business, and all these different things. They've got their AI supercluster they're building, and a lot of the bulls will point to those types of things. Let's say talk about the AI supercluster, Dojo, and all that. And I looked at it from an investor perspective, and I said, okay, what's actually generating revenue and profits that can help drive cash flows of the company? And a lot of that stuff like the AI superclusters, those are costs, not revenue generators, at least today, right? Maybe they help enable the humanoid robots or the self-driving, but they're not by themselves generating incremental revenues. And so if you actually look at a lot of that stuff, humanoid robots still probably years away from generating actual revenues. It's hard to actually point to those things as drivers of underlying cash flows that you can put a value on today. So I was being a little bit, cheeky about that slide and saying how much of this actually generates revenue. I do think Tesla is still predominantly a car business. Even the robotaxi stuff they're going to unveil, I think, it's still going to be a transportation/car centric business. And so that I think is important to remember if you're buying the stock. You don't want to get too caught up in bull narratives about, battery breakthroughs, if they're not actually going to generate higher revenues and higher profits for the company. So I think that's important to just have a level perspective on some of those things.
Well, and some of the most outspoken Tesla bulls that I've seen on social media, they keep leaning into the robots, and I'm like, okay, yeah, that could be a big thing, but how far away is that? And is that something that is going to be a profit center right away? Or, I don't know. It's just,
well, look at how long it's taken robotaxis and even the EV adoption. I mean, it doesn't happen quickly.
Yeah, and I still think we're in for a tough period for the robotaxi business. We're starting to see things like Waymo's become more popular, and they're actually rolling out to more cities. And I know Tesla's probably about to put the pedal down, so to speak, on that business. But I think there's still going to be a lot of back and forth with regulatory issues in different states, different cities that are pushing back. The Uber drivers are going to be pissed; they're going to be pushing back. So there's going to be a lot of fight still to be had in that business to make it a business in the next 10 years, and it's not without competition. That being said, the stock market loves cult stocks, like we talked about. It loves exciting stories. Tesla's doing some exciting things. The stock market will also price stuff in ahead of time. So I did the back of the math envelope on some of the Tesla humanoid stuff, and it could be a massive business. The economics of it could be very good for Tesla. So if the stock market does start to price that in a couple years ahead of them actually rolling them out, it's not going to be shocking. It certainly is a possibility that it can drive the stock well before it actually produces, right? Just like robotaxis have been. So I have to be realistic from the investor side too, and say, okay, it still might actually drive the stock, even if it's not driving the underlying business.
Although I'm against robo people or human what do you call them? Robots? Robots?
Humanoid robots.
Humanoids. I'm against the humanoid 1,000%. I can't be alone in this. I can't be the only one that doesn't want to see
you wouldn't feel safe staying at home with a humanoid following you around doing your bidding? I would punch it in the
face. No, I would.
Oh, imagine.
Man, I could use half a dozen of them right now. I've got, fields that need to be mowed. I've got projects that need to be built. I've got stuff that needs to get cleaned. Oh creepy. Man, I would pay a lot of money for one.
Would you let one inside your house while you were sleeping?
No.
I would lock my door. That's for sure.
Oh, we've all seen the movie. Movies come true a lot of times.
Would you trust one to carry your kid around?
Absolutely not. Absolutely not. You have a software flaw and it's just like it crushes your kids like bones. No, thank you.
Yeah. Oh, hell
Um,
no.
but
I
it could help out maybe in some projects in the yard. I don't know. We'll see.
Oh yeah, man. I'd be like, take the tractor, go mow, go pick up down trees. That'd be
ugh.
amazing. Um, all right, we've got a couple questions here that just kind of randomly came in, but I thought would be good for this show. So the first one could be like a whole show in and of itself, but one of our long-term listeners, Raz, here on Twitter, he responded to one of my tweets where I said, there's things that compound in value over time, like skills, Bitcoin, healthy habits, stocks with positive free cash flow. And then there's things that kill value over time, like day trading, fiat currency, shitcoins and NFTs, unprofitable cult stocks, e.g. GME. And Raz was like, can you explain like how compounding actually works with like assets, right? Like, isn't Kager just looking at price appreciation? And then he used ChatGPT to ask this question: how does simple price appreciation get considered as compound interest? Which I didn't call it compound interest. I said compounding. But if I buy 100 shares of, say a stock, and I let that position rise, is this a appreciation or is it compounding? And how do you think of that? And what I was alluding to was like the flywheel concept, right? Of like how once you get momentum in a business, it kind of the fundamentals actually compound on itself, right? With like consumer growth and valuation metrics and like reflexive stuff actually helps the business to compound over time. How do you guys think about that? And do you agree with that idea that, value can actually compound, or is it just like simple appreciation?
Well, it is in a sense simple appreciation, but I think to appreciate how it compounds is you sometimes just like want to look at examples like Tesla could be one example, or Apple. Like if you bought Apple and this is going to be an extreme example, but if you bought Apple in 2005, 2006, obviously if you had held it, right? If you didn't sell it, if you bought it 2005, you held it, you're up like what, 10,000% or whatever the number is. It's probably even higher than that, right? And so, yeah, you could just look at that total price appreciation over the period and say, I'm up 10,000% or whatever the number is. But what's interesting to look at is the value gained. So on an annual basis, Apple stock might be up 20% this year. And that might not sound like a ton. You're like, okay, I'm up 20%, 20%, 20%. I'm up 20% a year for 20 years. But that 20%, if you look at the dollar change in Apple stock, so it rose 20% this year, the dollar change in that stock price was probably actually a multiple of your initial cost basis if you had bought it in 2005. So that's what we mean by compounding. The dollar value that you're gaining each year is actually rising at a higher rate. So it's like the percentages, yes, might just be 20% a year compounded, and that gives you a total return of 10,000%. But that 20% in dollar terms gets larger and larger and larger as you go on. So your 20% gain in year 20 of holding Apple stock is going to be such huge dollar amounts relative to what that 20% gain gave you in year 1 or year 2. That's the effect of compounding. So he's right in the sense that, yeah, like price appreciation as a whole, like it doesn't mean that like you're compounding anything else other than your dollar gains. Your dollar gains are getting larger and larger in value over time. And so the magic of compounding is that, again, like your dividend from Apple stock this year might be larger than your entire cost basis if you bought it in 2005. And that's the kind of thing that I think is helpful to think about. So a company that can increase its intrinsic value and a stock price that can keep compounding at a high rate over time gives you larger and larger dollar rewards, so to speak.
Well said. Yeah. And that's, I think what I was really going to is like the power of just compounding over time, and how, yeah, it doesn't matter if you define it as appreciation or whatever. It's like, once you get your portfolio to a point where you either are on your way to escape velocity or you're well past, it's like, you really start to feel the benefits of compounding. And, I just think that, that there's also like non-financial things that compound. Like, like if you have a skill of A and a skill of B, when you put those together, they can be worth way more than the sum of their parts, right? And same thing with like healthy habits. I think stuff like that compounds. And I also just wanted to create, a little bit of comparison or contrast to things that are like truly just kill value or kind of not negatively compound, but just don't get that compound effect, like GME and BBBY and shitcoins and NFTs. And, a lot of the like kind of just like get rich quick stuff that people chase around. So I think that's what I was really going for. Nick, did you have anything you wanted to add to that?
No, I mean, I think you guys nailed it. Yeah.
Okay.
Nothing to add.
Well, this is a question for you. What do you guys think about the MSCI World ETF? Is that a long-term store of value in your opinion? We know that international stocks have greatly underperformed the US, but what do you think about the World ETF and specifically going forward? Is it a good thing for somebody to consider in their portfolio?
So yeah, the World ETF is going to basically encompass US and then international as well. So what I've noticed is if you want to keep things simple, it's okay to invest. VT is a similar one. VT is Vanguard's Total World Stock ETF. So if you want to keep things simple, sure, you can just buy one ETF and have exposure. I'm actually just looking at the allocation of VT, and VT has a little bit more international exposure than the MSCI World. So again, you got to know what to look for in these ETFs. You got to look at the allocations, look at the top holdings, all of that.
Yeah, I'm actually kind of shocked, by the way, looking at the current holdings of the MSCI World ETF. It's very US dominated right now.
It is.
Which, has been great because the US stock market has outperformed most others, over the last 5 or 10 year period. But they're in the top 20 or 30 holdings. There's not that many international companies right now in the MSCI world.
Yeah, so you have to look out for things like that, right? Because if you're truly trying to get world diversification, you have to make sure you're getting it. And the other side of that is I've noticed when I run model portfolios, if you actually break down your ETF holdings, so you hold just a US only ETF, international only ex-US, small cap ETF, if you kind of itemize your holdings, so to speak, instead of holding just one ETF, typically the returns might be slightly better doing it that way. So it is essentially better to kind of have individual ETFs that are more focused on that specific style of investment or that specific geographic region or that specific size, mid cap, small cap, large cap. But if it's just overwhelming and it's just easiest to just have one ETF, yes, this is a way to approach it. But it's definitely the simplest way. Is it the best way? Probably not, because you don't have a lot of flexibility over how you're allocating to these different categories, but it's definitely something you can do.
Awesome. Yeah. Just looking at the holdings here. I mean, yeah, VT, the top holdings are basically the Mag 7. So
yeah. And you also
is there a ticker that is ex-US that you guys think is a good one for people to look at?
VXUS is a popular one for ex-US. That's just going to be international. Obviously, this is not a suggestion to buy any of these. This is just telling you the general ETFs out there. There's many of them. I mean, VEA, VEU, VWO. So
yeah, and let's compare that. So VXUS, if we just look back, let's do like a 10-year performance, close to a 10-year. You can see that the what I've got up here is the SPY. So the S&P is up over 200%, where this is up 30%. And let's go back to like the COVID lows in the spring of 2020. We've got the S&P that's up over 100. This is only up, about 50%. So this is what I mean when I say like, international has underperformed US by a pretty large deal. Do you guys think this trend is going to change? Or, obviously we have home bias, being US citizens, but like, do you think US is going to still dominate? I mean, I know I've been seeing some stuff on Twitter lately that talks about like how much of the tech innovation and the startups are still in the US and how tiny Europe and even China is right now. It seems like just most of the innovation is still coming out of the US.
This is the great debate right now. This is literally what everybody's like debating and talking about.
Yeah.
And I'm talking to so many people that are just VOO and chill. They're VOO, which is an S&P 500 index. They're just buying the S&P. That's it. Nothing else. And the thing is it is a great debate. And of course, I don't think anybody really knows the future, but the reality is the US stock index does have international exposure. I believe it's 40% of the revenue comes from international revenue. So for the S&P 500 index, this is from FactSet's data, which is very interesting. So it's like, okay, and of course this is just large cap. But when you think about it that way, it's like, okay, so the S&P is giving a lot of international exposure because naturally these corporations are expanding internationally, but a lot of the innovation is coming from the US and originating out of the US. But I don't know. I would be curious to hear. I think that at a certain level, you've got to diversify, and there are reasons behind that. And everybody's situation is going to call for a different allocation for a different reason. But Trav, I'd be curious to hear where you're at with this argument of, is the US enough for a portfolio?
No, yeah, I mean, the benefits obviously for the US are that, one of the deepest capital markets that generally are focused on, shareholder value and returns. European markets, the number of publicly traded companies, smaller, the amount of shareholder activism that happens there a lot lower, the amount of new IPOs for new exciting tech growth companies there lower, right? So especially US versus Europe, it seems like US is kind of a clear winner, and I don't see why it wouldn't continue to be a winner. I do think at these valuations that we're sitting at here with the US market, historically relatively high valuations, it does make sense to think about layering in some other exposure. Maybe it's China, maybe it's India, maybe it's Japan. So if maybe it's Australia or Canada, where you get a little bit more resource exposure if you think that energy and commodities are going to do better over the next decade. So I do like layering in some of that exposure, especially when we're at relatively high valuations. But I still probably would say that the U.S. capital markets publicly traded equities still are in a pretty strong spot relative to many other countries out there.
Yeah, well said. I mean, yeah, and I, Nick, I agree with you too about like the idea of just U.S. company that gets international exposure. Like that's a pretty good idea. But what if the U.S. does become too expensive, or hopefully we don't have some kind of catastrophic event where our economy does get destroyed or innovation stops working here. But yeah, maybe diversify out. And Trav, I know you've talked a lot about the pros and cons of Chinese stocks, and China's definitely underperformed, at least from the equities that we get access to here in the US, where India's actually done quite well, but even access to their markets are somewhat limited. So that's the challenge of being an investor, isn't it?
Yep.
Before you wrap up, I do have a pop quiz for you guys.
Ooh. I hate pop quizzes, but let's do it anyway.
two assets. You tell me which is the best performing year to date.
Ooh.
Okay.
Do I get to use my
S&P
charts?
500, S&P 500, or gold.
Oh, gold.
Best
Gold's up
performing
like
year to date.
Gold's up, I think 25% year to date, right?
It's gold.
Yeah. Let me pull up the chart.
I was just surprised by that. I
kind of cheated because I looked at this the other day, but yeah, gold year to date is up 26% today. And then would you say the SPY is up? Yeah, 21%. And Bitcoin is up 40. What did I say earlier? 46%.
Bitcoin's there.
Yeah,
It's in the 40s.
46%.
Yeah. I didn't include Bitcoin because we all know Bitcoin is the best performing.
Yeah. Who
But
needs anything
I
else?
was surprised that, and the S&P is better performing year to date than the Qs, slightly better, which could change. But I was surprised that gold is outperforming year to date the major stock indices and the Russell, of course. I don't know.
Yeah.
Fun fact.
Gold this month has hit my multi-decade profit target. It's slow as hell. I mean, the chart is nice. And, I was building my physical position back here from 2014 to 2019, and it finally tagged the 100% extension. It's getting a little overstretched here. So will we blast through, 3K? I don't know. But,
Well,
even with these gains, the CAGR is actually not that great.
What's the fundamental reason why gold keeps going up right now? Because yields are interest rates are going down, right? Like how do we think about this, Trav?
Well, the relationship between real interest rates and gold broke. Like we talked about it broke like a year or two ago. Because with real rates on the rise over the last couple of years, you would have expected gold to do poorly, and it's done the opposite. So yeah, actually rates coming down presumably could help gold, but gold, I think people have been buying it. Other countries have been buying it for different reasons in the last 2 or 3 years. It's been, some have said that a lot of the Chinese buying has been because, of them trying to find other places for capital other than their stock markets and the property markets. That could be a reason. Of course, the uncertainty out there in the world, right, with wars and different geopolitical events, that's a reason why some people are buying it. Then there's the scarcity argument, which has historically been a long-term argument for gold, which is the dollar losing value over time relative to hard assets like gold. So all those things I think definitely come into play. You could argue though, maybe if the Chinese and other foreign entities have been big buyers of gold, as that slows down potentially, as they start to try to get more interest in their own equity markets again, that could actually provide some downward pressure for gold in the short run at least. So yeah, it's hard to know exactly. Gold's one of those assets, kind of like Bitcoin, where you don't exactly always know what the fundamentals that are driving it in any given moment are.
Nice.
Yeah, well said. And, just taking a look at silver, silver's not a great long-term asset, right? Like the CAGR on this going back to the 70s is not that great. But as far as the trade setup, man, I'm kind of eyeing this
silver is
33 breakout.
Slowest moving.
It is until it isn't, right? You get
It
these
is
like
until it isn't, yes, but
every couple of decades you get a parabolic move.
every couple of decades.
Yeah, exactly.
Keyword.
Yeah, back here in the 70s, early 80s, and then here in the
So
early
boring.
2000s. And yeah, it's definitely not the best market, but I've been kind of eyeing a potential breakout here at 33. We're getting a pullback this week, but we'll see what it can do.
Yeah.
All right, guys. Well, yeah, we can go ahead and start to wrap it up there. I know, tomorrow we've got the robotaxi event. We've got the CPI report. We've got Hurricane Milton. What else are you guys looking out for or thinking about over the next week?
Ugh. I feel like when's earnings kicking up? That's happening soon, isn't it?
That happens. It starts kicking off in about a week. So the bulk of it won't happen for 2 or 3 more weeks. But yeah, we start kicking off earnings reports again for Q3. In like a week or two. So
which Q3 is not supposed to be the best quarter of the year. It's actually growth wise supposed to kind of be a little more muted. So
yeah,
that'll be interesting.
Yep, absolutely.
Cool. All right, guys. Well, if you're not in the wealth building community, what are you even doing with your life? Go to wetalkmoney.com/community. You can jump into our Discord channel, see our live classes, market updates, and get a bunch of our courses. Also, if you want to leave a question for the show, go to wetalkmoney.com and just submit your question there, or hit us up on Twitter, X, whatever it's called these days. And yeah, we will see you guys next week. Nick, Trav, thanks for all the value you add to the show. It would be nothing without you.
Thank you.
Thank you. Yeah.
See you guys next week.
All right.
Cheers.
See ya.
Take care, guys.